Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was a very choppy night right across the board as the US dollar, which measures the greenback strength against a basket of six major currencies, tumbles from its intraday peak of 92.82. This was after the US Federal Reserve Jerome Powell maintained a dovish stance at the beginning of his two-day testimony before Congress. Powell said that the central bank will maintain its easy monetary policy. In his testimony to the House Committee on Financial Services, Powell said that the central bank can wait before it starts to ease its bond purchases despite surging inflation readings. After the data showed just 2 days ago of the consumer price, which rose to 0.9% between May and June, exceeding economists' forecasts with the largely monthly gains since 2008. However, on a year-over-year basis, the Consumer Price Index, or the CPI, jumped by 5.4%. Later, the US Federal Chairman Jerome Powell is also scheduled to testify before the Senate Committee on Banking, Housing and Urban Affairs on Thursday. Along with this, we also have the US Department of Labor to release its weekly report on new jobless claims, with the forecast expecting first-time jobless claims around 350,000 compared to 373,000 for the week ending on July the 3rd. Looking at the Australian dollar, I believe this pattern with the RSI, or the relative strength index, is still poised for a further up test, even though we've got quite a few negative candles here. With the recent bullish divergence and also the MACD holding a positive signal but weak, can still see a rise up towards the region of 74.95, and I'm still keeping the target at 75.60-65 in focus. Unless this pattern somewhat changes, then I feel the market can continue its upward trek, with the support seen at 74.40, and if we do see a close under there, may actually negate my topside call. But at present, I still feel that from the technical aspect, we are possibly going to see a rise towards at least 94.95 after the overnight challenge did get to a high of 74.86. Looking at the euro, well, at the present, the market has rebounded off the lows around 117.50.80. Along with that, there was bullish divergence mentioned yesterday, which also kicked in. Now, if the dollar index does weaken somewhat further on the back of Powell's second speech, then we could see the euro push back up towards the 118.40.45 to 119.15, and therefore could put a little bit more of a question mark on the recent highs that we saw for the dollar this week. The dollar yen rejected that trend line, which was around the highs of 110, and plummeted, and now looks towards the target holding at 109.60.70. Reassess from there, because if we see a close under 109.60, that would put into focus a 109.10, or even see the bears either level around 108.45. Technically, we are quite heavy. But let's not get too negative towards the bottom side of this range around 109.60, because previously was a strong rejection from there. So let's see how the market plays into tonight. Sterling still a little bit uncertain, as the market is still questioning the recent opening of the lockdown, with pressure back on Prime Minister Boris Johnson. May see some changes, and also the pressure of putting mandatory masks back into closed spaces as the government plans to lift more restrictions next week. From a technical point, the market is still attempting to recover. However, if we see a close underneath the level of 137.75, it's about 50 points away, would reinstate the downside of 137.40 to 136.55. Until then, we still could get short bursts to the impulses or bursts to the upside and look towards 138.65 to 139.60.80, where I see as a cap. With the dollar yen, or the yen strengthening has pushed sterling yen lower and keeping to its objective, which I'm holding at 151.5560. If we don't see a bounce from there, then we could even see the market drop lower towards its recent challenge around 150.70.75, with the technicals all in line. Finishing up with gold, the market finally took a challenge to the upside and near enough reached its objective of 1,831 to 33 that I was outlining this week. Keep an eye on that level, because if we get a strong rejection, we are overbought. With a mild trend kicking into play here, could see a turn back towards the downside of 1,800. But that's not ruled out at this stage. One more test to that top side, 31.33, and see how the bears respond after previously stepping in overnight. Oil plummets away from that 75 handle and now puts further risk on the downside and looking towards its recent challenge around 69.5 to 70.20. Reassess from there, because beneath that looks to 68.70. With the recent development coming back into concerns of the Delta variant, has put a dent in the short-term crude demand outlook. However, let's see if the market first of all can turn around from that 70.20 level, but with heavy technicals, does give a bit of a concern. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.